always with any type of investments, clarify your goals. What is your income need? What is your growth need? Are you looking for tax benefits? And what level of diversification is your portfolio going to require? Decide on your level of involvement. Do you want to be the landlord and be hands-on and deal with how the radiator broke in the old building, or the hot water tank has a leak and you got to deal with that? Or do you want to pass that on to a management company, or do you want to even be more of a passive investor like using a REIT? Run the numbers and stress test it, because everyone always looks at the best case scenario. You have to be willing to live with, a stress test of a worst case scenario. Can you manage that? Can you handle that? So ROI matters, cash on cash matters. Look at your internal rate of return and the tax impact. And again, stress test. Look at vacancies, change the vacancy rate. What does that do to your debt service? What happens if there's pressure on the rates that you're charging per square foot or per unit? What other market downturns can negatively impact? I remember in Cleveland one time, all the businesses on Euclid Avenue, some of them went out of business because they changed all the lane usage, and instead of having the buses run on the outside lanes like they traditionally did, they put it down the middle, and they took several years to really revamp all of Euclid Avenue. And because of that, some businesses couldn't survive because they stopped having traffic. So there could be things that you might not even think of that could really impact your investment in that real estate. And again, real estate decisions should fit your total portfolio, your estate plan, your tax plan. So you don't want to do this in isolation. Again, some people think owning real estate's very sexy, and it might be for them, but you need to take the emotion out. You need to look at the brass tacks. You need to understand, cash flow, debt service, all the stress testing we talked about. You want to make sure you're putting good money into a good investment so that you're rewarded appropriately. So at the end of the day, the best returns in real estate usually don't come from timing the market. They come from being knowledgeable, doing your research ahead of time, being disciplined and intentional about how each property fits your biggest picture.